Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
All right, guys, welcome. Good morning, good evening, good night. So I'm going to be doing something slightly different tonight. We are going to be doing analysis like usual, but I want to do a small experiment, and just let me know when you can see my screen. Just type yes in the chat. Yes, you see my screen, or you're not seeing my screen. But I want to do a small experiment because I want to teach you all something about, and this is something I learned probably within the last year and a half, maybe 2 years, right? And it has a very serious effect on your analysis, right? Good. So I'm seeing people seeing the screen. Very good. So on the screen, I'm going to write a few numbers, right? And let me open the drawings panel here. Get the text tool, and I'm gonna write a few numbers here. All right, and I just want you guys, I got this experiment from a YouTube channel by the name of Veritasium, right? If you know it, you probably know the experiment. If you don't, it's actually going to be quite interesting, right? So I have some numbers on the screen here. What I'm going to do, I just want you guys to tell me, what do you think these numbers represent, right? So I'm not doing the experiment the exact way that they did it on their channel, but what do you think these numbers represent? So what you can do, you give me 3 numbers. I have given you 3 numbers. You give me 3 numbers that you think this represents, right? So this follows a certain rule, right? These 3 numbers follow a certain rule. You give me 3 numbers that you think follow the same rule. What do you think? I promise you, if you take it seriously, I promise you it's going to react back to trading. But I want you to take it seriously. What do you think it relates to? Somebody says EMAs. All right, good. No, but no. What do you think it relates to? Anybody? Yes, no, anybody knows? So give me 3 numbers in return that you think follow the same rule of these 3 numbers. 6, 12, 24 follows the same rule. What is the rule? Antonio, what is the rule? Number of the past number. Time frames, no. Doubling, no. So Antonio is close, all right? Antonio, 6, 12, 24, it follows my rule, right? 2, 4, 6 follows my rule. 5, 10, 20, Simeon follows my rule. What is the rule? What is the rule? It's a tough one, Ed. Anybody else quickly before I want to move on? I'll give you guys probably 2 minutes again. 7, 14, 28. Good. Follows the rule. What is the rule? G Diaz. What is the rule? Let me see who on it. Double the number by 2? No, that's not it. Because Juan Carlos said 2, 4, 6. It's the same thing. Multiply? No, that's not it. So double it rule? No, that's not it. 3, 9, 81 follows my rule. What is the rule? Timmy Dio. What is the rule? 20, 50, 70 follows my rule. What is the rule? 10, 20, 40 follows the rule. What is the rule? Psychological zone? Nope. So I'll tell you all what it is, right? Numbers in ascending order. That's it. 12, 24, 48. These are numbers in ascending order. Everybody would try to copy the way that I have done the numbers, right? Meaning you double them, and everybody would have that same concept to give me numbers that double 5, 10, and 20. This is what you call a cognitive bias, because naturally you want to follow the data that you're seeing. You have been, this is it's a type of cognitive bias called a confirmation bias, right? And naturally the data that you're seeing, you want to confirm it by doing other things to confirm what it is you're seeing. So you're giving me a return on what you're seeing by telling me what you believe. This is very dangerous as a trader, because what it does is it makes you look for things that you believe to be true. Do you all understand what I'm saying? In other words, what I'm telling you is, as a trader, instead of trying to look for things that you believe to be true, what you should be doing is trying to look to disprove what you think might be true. So instead of trying to say, so what you could have done is you could have done maybe different numbers, maybe choose a different order of the numbers, maybe 5, 2, and 1, which would obviously not follow the rule of ascending numbers, right? And the interesting thing is, there you have now disproven the fact that this rule that I have is not a multiplication thing. The reason why I'm telling you this, and I said that it is going to relate back to Forex, the reason why I'm telling you this, and this is very important, as a trader, your goal is not to try to find things that work, it's actually to find things, prove to yourself as a trader, find things that don't work. When you're learning a new system for the first time, what you should actually be doing is trying to find when the system doesn't work. Because remember, what you really want, right, is consistency within a system. So if you can disprove that system doesn't work more times than it does, right, or prove that it works less times than it actually does, what you're actually doing there is finding out if this system indeed has an edge, right? And I'll tell you the interesting thing about this bias, right? This cognitive bias. It is instilled into every single one of us, because that's what you do as a human. You always looking for things to prove to you that yes, this is the truth, this is the truth, this is the truth. Whereas if it is you try to figure out if this is not the truth or this does not work, you will quickly realize that a lot of things, a lot of things aren't what they seem. So here's a beautiful example. You will find a lot of the time traders using momentum, right? So I'll use right here on AUD card as a beautiful example. A lot of traders, and maybe even some of you in here have done this in the past, where you try to buy support, and every time you buy support, you buy it, you buy it, you buy it. Eventually, you get a few trades and it wins. And then sometimes you lose. And then when you lose, obviously, you go into a losing streak, right? So what you end up starting to do is you say you're not going to buy support anymore, because clearly support and resistance doesn't work. It's not that it doesn't work, it's that the way that you're doing it isn't working. And what you actually end up doing now is, and I know this because I have done this as well. You start to say, well, I'll just wait till the market is trying to buy when it is actually buying, which is technically what I do. But here's how a lot of traders do it. They use these candles. So they'll see a big black candle going up, and they'll say, right, it's going up. That is it, time to buy. And you know something? Sometimes it works just like support and resistance. You might buy here and then you're literally good to go, right? And it goes and it buys and you're good to go. You win the trade and you're good to go. But then other times, similarly, it doesn't work. Where you'd think that you'd buy here because the market is going up in a move like this. And then as soon as you buy, because you've bought on a buy candle, thinking that it's buying, this is a confirmation bias, by the way. Because you've bought on a buy candle, essentially what you're doing is you're buying in a very high place. And thus, obviously, it comes and it stops you out, and then you're back to square one again. The interesting thing about what I'm going to talk about tonight is obviously candlestick anatomy. And it's something that I have used for a very long time, which is really and truly buying the opposite candle. So if I'm placing a buy on a trade, I'm actually going to be buying the exact opposite candle. I'm going to be buying a red candle. So for ease of understanding, in a case like this exact scenario here, instead of trying to buy within this range here, with this region here where there are no red candles, I might try to buy this candle, because this candle is opposing to what naturally the natural confirmation that you want. If you're buying, you don't want to see red. Naturally, listen to the word I'm using. That is what a confirmation bias is. It is basically your natural intent or your natural need and want and desire to follow what it is you understand because it makes sense. So by trying to disprove that fact and trying to disprove if this thing doesn't work, you quickly get a lot of data, right? You might lose the trade, you might, but you're getting data that's usable. You understand? So what I would do is I would buy in the same range here. I'm not saying I bought it, I'm just saying I might buy within here, but I'm buying a red candle like this, which is counterproductive. It's counterintuitive, I should say, not counterproductive. It's counterintuitive, because if you are buying, you don't want to be buying where there's red. You don't want to be buying where there's bearish moves, right? Now, the interesting thing about that for me is when I am teaching it, a lot of people have a lot of problems understanding it right away, at least, right? And it is because of that confirmation bias. Naturally, you don't want to buy when you're seeing a red candle. You don't want to buy when you're seeing a bearish candle. Is that correct? Am I correct in stating that? How many people here, who are not my students, obviously, but how many people here feel like they are confident enough to buy when they're seeing a red candle coming in? How many people in here listening to this feel that they're confident enough to sell when they're seeing a green candle or a bullish candle coming in? Be honest. And the thing is, and there might be a few people, but the interesting thing about that is because it is counterintuitive, because it goes against your confirmation bias, right? Because it goes against what you have inherently built yourself up to thinking, right? And you see, it's basically proving my point, right? Because it has been built up to go against what you've learned, right? The interesting thing about that is oftentimes that is the thing that is going to give you the most amount of data. And by no means am I saying, and I want this to be clear tonight, by no means am I saying that you're absolutely going to start to win more trades when this happens, But what I am saying is it gives you data now that you can use to make better decisions from. Because our confirmation bias stops you from learning. It basically relies only on your previous or your preconceived notions about what you're looking at. But remember, to keep learning, you need to keep absorbing, you need to keep getting data. And if for some reason you're losing, obviously you need to do something, you need to get more data, you need to get some understanding of why you're losing. And you can only get more data if you do away with your confirmation bias. Am I correct in saying that? Does it make sense what I'm saying? Does it make sense what I'm putting out here? So for me, what I really do when the market is buying, what I would simply do, once the market is buying, if I'm seeing momentum in the opposing direction being rejected, meaning if I'm seeing the bears being rejected and it's a bearish candle, trust me, I am interested. And it happens a lot of the time. Now, the mistake a lot of people, a lot of teachers within this space make is they try to teach you, right, a pattern, a candlestick pattern. There is no teacher. I wanted this to be clear here today. There is no teacher that can teach you a candlestick pattern that is going to win 100% of the time. What I tend to do, I don't try to teach a strategy. What I try to do and what I'm trying to do now is trying to teach you how to think. Because to be a trader, you have to know how to think. You have to know how to process data. You understand? And that for me is what is, where perspective comes in. So let me show you something here. I took 2 trades basically. Well, one last night and then one this morning, right? Well, this morning, early hours of the morning, and then one last night, right? And I'll talk about them and then we'll do some analysis. So I'm going to show you gold first, right? And we're going to break down gold. And I was stopped out in profit at 123 pips this morning on gold, right? So this was late last night, right, on gold. And I'm going to break it down, but this entry goes against a lot of what people know or believe. And let me explain myself here. So before I even explain this trade, I want to explain the loss that I took on. Well, let me just say the loss. Me getting the directional analysis wrong on gold for NFP last week. If you follow my YouTube and you subscribe to my YouTube, which is Ikata Trading, you would see that I would have posted an analysis on gold a few minutes before NFP came out. And I was saying that gold would have continued up, continued bullish, and just continued to move from this area here all the way up, right? And I was, as you can see, I was absolutely incorrect. The beautiful thing about that is I wasn't in a trade at the point, so I can have a wrong analysis and be fine, right? It's very important to know the difference between an analysis, a bias, and an entry. A lot of traders don't know the difference, and I'll come back to that very briefly, all right? But this here confirmed to me, this move here confirmed to me that gold would have been pushing back up. And when I'm saying confirmed, I'm saying it confirmed my understanding, because one thing I perpetuate is I don't know what any market is going to do. But it confirmed to my belief and my understanding that gold was going to push back up. And it is because of, remember I told you, if you're seeing rejection in the opposing direction to your overall bias. So if you have this big bull move down, and then you have a slight rejection to the downside, and then it starts to go back up again. You have rejection to the downside and momentum to the upside. Isn't that a bull move? What do you all think? Do you agree with that? Isn't this now considered a bull move? Barring, let me use the replay function here. Barring this, isn't this here a bull move? And isn't gold in a bullish market? So I might have been wrong about the analysis here, but I never got into any trade, and again, it's fine, right? I can get the analysis wrong and be cool. The interesting thing about this is because it is, excuse me, in a bullish market, and I'm just using these two lines here as a general range. You realize I'm not even using a trend line. I'm using the paintbrush tool just to showcase that it's in a bullish range. The fact that it is in a bullish range tells me that I have a very high possibility for buys. Now, to confirm that, obviously, that's my bias. To confirm that, I'm going to produce an analysis now. So the analysis went as follows. So you have on gold, you have this area up here. And what does this area represent? If you look to the left, obviously, just on the 15-minute time frame alone, if you look to the left, you can see that gold doesn't have any recent price action at this area. But it also means that there are a lot of sellers coming into this area, right in these two particular areas here. Just agree with me or disagree. Do you agree that sellers are coming in great mass in these two areas here? Do you agree? Do you disagree? All right, I want to make sure that we're on the same page here tonight. All right, do you agree that in these two areas, sellers are coming in great mass? All right, yes or no? Yay or nay? Y or N? Yay or nay? I know we're waiting on the right. Nice, right? So people saying 15 minutes, not really. All right, cool, good. So for me, here's what my thought process was, right? If sellers are coming in, there's stop losses of sellers above this area. Cool. It also means that there are buy stops of sellers above this, buy stops of traders, sorry, above this area, with traders thinking that the buyers are obviously going to win and market is going to push up. So it makes sense that at this point in time here, which was right before NFP, this is the NFP candle here, it makes sense that the dealer is going to try to go for the stop losses of these sellers here, target and activate the buy stops of the buyers, and then possibly, and I said that in the analysis, right, which is where if you could go and see it for yourself, right? And I was wrong, and that's fine. But now I'm looking at it as we have the same exact setup, albeit it's not a double top. It's actually an accumulation, but not at the high. But we still have this area up here where I believe sellers to be in great mass and buy stops to be in great mass. Do we agree with that? Do we agree with that? Yay or nay? So my thinking is very simple. It makes sense that one, above this high, right above this area here, there's going to be liquidity, because we know that there are going to be people trying to sell here as well. And we know that it makes sense that there are still buy stops up here. There's still sells up here. So there's liquidity both above this area and above this area. So if we come back to what I said, where you can have rejection and then momentum in your favor direction, that's a good sign. So it's very simple. You get rejection and then you get momentum. Cool. You have accumulation of this area. And then let me use the replay function here. And then you go forward one candle. All right. Just a minute. All right, good. So we're going forward. So you can see that it takes out the sellers up at this area. All right, cool. And then it starts to go down. And then going down, this is now activated the sellers who are late. So the sellers who are late, they're saying, all right, good. So this is indeed a resistance. Cool, no problem. And then my thinking was, I'm looking at this area here. Just a minute. I'm looking at this area here as a potential area where the dealer might be targeting, because guess what? There are people who are looking at this as a break and retest, or a potential break and retest now, thinking that it's going to continue to sell. So what I want, obviously, is rejection, either rejection to this area, right? And if it breaks, obviously, I just wouldn't do anything. All right, interesting. So it comes into the area. So by coming into this area now, what I'm going to do, 1 minute time frame, I want to pay attention to how the market is playing off of this area. So I'm watching it and I'm monitoring it. And the fact that it did not stay at this area for any duration, this is the 1 minute time frame, and it stayed in this area for all of 1, 2, 3, three candles for the most, and went straight back up. Straight back up. This automatically told me, yes, this is a potential for buys. Now, if you come back on the 15-minute time frame, if you realize what it's looking like is it's actually confirmation of the same. If we come back on the 1 minute, you remember I told you the type of candle that I want. Remember I told you that? I said it at the start of this session. If there's momentum, rejection in the opposing direction of my momentum, so it's bullish momentum happening here, rejection here, rejection here. This is the exact candle that I bought. And then, well, I don't think I need to explain myself after the fact, but as you can see, let me play it. As you can see, just a minute. Let me go. As you can see, that's the end of that. And it's absolutely a beautiful trade where almost immediately, with a 10 pip stop loss, as you can see here, it gave me 1 to 5, within a few minutes, and then some, right? And I'm going to go to the 15-minute here. Excuse me. So all this time, I already gone to bed, right? So I'm playing it, and it came back to my entry. All this time, stop loss, not a break even, stop loss, nothing. I'm just cool, right? I'm chilling, right? And if we watch it, it comes right up into this area, which is where I originally wanted it to go, right? But it rejects. So at this point now, coming up into this area, this is where the stop loss goes to break even. Because from the time it gets into this area, I'm saying, okay, good. It makes sense for me to maybe start to secure this, because maybe it's going to try to drop off of this area again. Let me play it and see. And the very thing that I want to happen, which is exactly this, look at here. The very thing that I want to happen is exactly what happens. And well, I'm not going to go into detail how I trailed the stop loss and how I was taken out at like plus 120 or whatever, but I was taken out right at this general area here, right? So let me close this now. Right. I was taken out at this general area, 120 pips, right? But if you realize, but at no point in time, right? At no point in time, I was confused about what I wanted to see. And something I want to make very clear about an analysis. No trade. I was talking with, if you all in the group chat, the Trading Nut group chat, so you can join the Trading Nut group chat, right? If you're in the Trading Nut group chat, you would know Scaled Up, right? And he and I was talking, and he said something to me. Other traders can only challenge you on two fronts: your risk management and your psychology. No other trader can challenge your analysis, because that trader does not know what the market is going to do either. So maybe you think that this analysis is garbage, and you might be right. But here's the beautiful thing about it. Once you understand what you are looking at, that's it. I have a bias, I have an analysis, and I had my entry. That's it. That is what is important. I want to make sure that you know that it doesn't matter what other people think about your analysis. Do you understand what you're looking for? Are you comfortable with what you're looking for? Does it make sense to you? If it does, forget that. Because anytime you start to follow and listen to other people, guess what is going to begin to happen? You're going to start to listen to them. You're going to start to doubt yourself. And then what you're doing, you're creating an external cognitive bias. So for me, I'm just going to do what I know, right? So that is gold. Now, Euro GBP is the other scenario. And this trade was taken in New York today, right? Euro GBP. And it is still open. Now, I just recently moved my stop right here because market changeover did this, right? But if we pay attention, so my stop is literally right here right now in profit, right? After this happened, because it might have taken me out to try to, I'm guessing it probably would have if it dropped even further or the manipulation was worse, but I'm still in the trade. The same principle. Bullish momentum, rejection, clear rejection to the downside, and you have that here, you have that here, you have that here, 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 right? Same exact thing, same shit, differently, right? So you have a high here. You can see that the dealer took out the sellers, came down to grab some liquidity. We go down on the 1 minute, same thing, right? As soon as it came down to this area, guess what? Look at the candle that I bought. As you see the momentum come up, it doesn't stay in the area very long. This is the candle that I bought. Boom, it's gone. It is gone. And it is at present still in profit. And you realize that I'm not using EMAs. You realize that I'm not using any indicators. You realize that I'm just using momentum and looking for where the liquidity is by virtue of where I think the sellers would be, where I think the buyers would be. That's it. That's it. All right. You don't need any indicator. You don't need nothing. All right. Let me show you an analysis on AUDJPY. All right. I wanted this to play out today. Look, I still have the alert here waiting. I did this video and I posted it on YouTube. If you do not follow my YouTube, I don't know, Ikata Trading. I posted this exact thing. Same thing. Bullish market. You have this high here where we know, or let me just say where we know, where I believe traders to be trying to sell and they'll be buy stuffs above this area. So it makes sense that AUDJPY might try to get back to this area to break this area and capture some of that liquidity. You have a little accumulation range, right? Little wedge pattern. So we know that traders might be trying to trade the breakout of the wedge. We know that that's what they do. We know that they see a wedge, if it breaks down, they're going to treat that as a breakout. They're thinking that's going to happen. In actuality, that's most likely what is going to happen. So that's what I had. So I'm thinking that it's going to break down, break this area, because we know that in this area here, let me remove all these joints. In this area here, there's a massive amount of buying liquidity, right? Because there are buyers at this area, right? And we know that stop losses of buyers would be below this area. So it makes sense to the dealer to try to target that area, capture those stop losses, and then move up. Think about liquidity grab, right? Think about a liquidity grab as a road trip, right? So let's assume that you are taking a road trip. I'm assuming a lot of you are from the United States, right? So let me just draw something really quickly. Let's assume this is the United States here, right? And this is the topmost left state, and this is the bottom most right state. And I'm guessing, I think this is Washington, DC. Am I correct? I'm not sure. I don't really know my states that well. And I know this is Florida, right? Yes? Is that correct? Think of this is an analogy I'm giving you here, right? If you wanted to have a road trip through all of the states, and instead of just doing this from A to B, what you actually want to do is you want to go through all of these states in a zigzag pattern with your car. You and your family, you all hop in your minivan or whatever, and you're going on a road trip through all of these states, right? The beautiful thing about this is you know that your vehicle cannot make it from Washington, D.C. through all of these states to Florida. I think it's Washington, D.C. You know that it cannot make it from here to here, from point A to B, without stopping in between for gas. These stops in between for the gas are liquidity grabs. And it's interesting that we're using gas as the liquidity grab, because what is gas? A liquid. So you know that you need some kind of liquidity in order for you to keep going. That is how I want you. That is how I want you to look at the market. I want you to look at the market as in it's only going to make a move if it has grabbed enough liquidity to do so. So for me, and that's why I have the alert set here, I want to see price come down. I want to see price break down to this area. Grab the liquidity of the buyers here, the buyers with the stop losses here, the sellers with the sell stops here. Grab that liquidity and then push up. It's in a bull market. I believe it's going to continue to buy. So, and I want you all to tell me, does anybody disagree with the thinking? I'm not saying if you disagree with the analysis, right? Yes, gas is a liquid. Oh gosh. It has fumes. Yes, at some point it will be a gas. Oh gosh. Oh my goodness. We know that it has different states, but it's just ironic, right? But does anybody disagree with my thinking? Does anybody disagree with the reason why I might have a reason to believe that it's going to go up to this area? Does it make sense? Does my thinking make sense? What do you all think? And again, I want to be clear. I could be extremely wrong, right? It is the traders who are not willing to admit that they're wrong are the ones that you need to watch, right? I am okay with admitting that I'm wrong, because guess what? If it doesn't do this, and here's what, if it, let's just say ADJPY just does this, boom, and it breaks down, then my bias automatically dead, because I know that this breakdown that I had here was clearly not the right thing. I was looking for something that wasn't there. I was looking in the wrong area, whatever. So obviously at this point in time, it makes sense for me to disregard ADJPY completely, right? It makes sense for me to completely disregard ADJPY. So let's do an analysis live, right? And people saying drop my YouTube link. Just type in Ikata Trading on YouTube. Let me put it here quickly. Ikata Trading. Just type in that on YouTube, or you could copy that in YouTube, right? Very good. So, thank you so much, bro. Right? It's probably a wick that needs to be cleaned on the high. Yeah, I agree. E-Burns, I agree. I agree that it might try to wick into this area and then grab the liquidity and then go. I could be wrong. I could be wrong. I'm fine with that. I am fine with that. But that's the beautiful thing about an analysis. You remember I said that I'll revisit the way analysis is supposed to work. I want to paint something here before I do the live analysis, right? How many times have you created an analysis and minutes after creating the analysis, you get into the trade? Who is guilty of that? Right? Who is guilty of that? Vaughn asks, do you use only the 15-minute for analysis? No, I would use any time frame that I need to use. So if I need to go on a higher time frame to get a general idea of the direction, I will. But in these cases, the momentum for me is clear, so I'm fine with that. But I'm coming back to my question. How many times, or who here, as soon as you sit down in front of your chart, you sit at the trading desk or whatever, you sit in front of your phone, you sit and you drop an analysis, you draw your trend lines, you do all what you have to do. And within minutes after you creating, right, after you creating that analysis, within minutes after that, you end the trade. Don't you think it's a little uncanny? It's a little coincidental that right then and there you found an entry? There's a difference between prediction and reaction, my friends. There are many people who say that they are traders, but in actuality, they are just people who trade. There's a very, very, very fine line between actually having an analysis and being able to execute upon said analysis. So many times you'll create an analysis and it doesn't do what you want it to do. And if you take the trade based on that information, based on that lack of information, I should say, you are basically shooting yourself in the foot and trying to run a mile. You understand? So there are many times that I would analyze a trade or analyze a currency pair, and I am waiting, what? Hours for the entry. I want you to think about this logically. The entry is what should take the time. The analysis shouldn't take very long. You should be able to analyze a currency pair in lightning speed. And that is why I'm able to tell you. I'm able to go through each and every one of these pairs, every single one of them in a matter of 10 minutes. Because I know exactly what I'm looking for. If obviously I need to go more in depth about in one, then fine. But it's when I now begin to really dig into one, let's just say ADJPY, I have to wait for the opportunity, right? I have to wait for the opportunity to execute upon that information. Does that make sense? What a lot of people do is the exact opposite. They spend hours on the analysis. Hours. They sit down and they draw and they listen, there's a whole art project on the chart. Right? A whole arts and craft project. I tell you, I used to make fun of people who do that, right? Where they have a car driving on the screen and a cow jump over the moon and all kind of nonsense they drawing on the chart. This candlestick and this new pattern and upside down super duper Batman Gartley pattern, all kind of nonsense they're drawing. but they enter in the trade within minutes of doing all of that. That is the essential point of having a cognitive bias, because you have now created the opportunity for yourself, where in actuality there was no opportunity to be had. You understand? That's why I say there's a very distinct difference between traders and people who trade. You should take your time finding the entry. You shouldn't take your time, right? You shouldn't take your time with the analysis, right? Analysis is something that you could drop like no for no. You understand? You could have a general understanding. You draw your zones, you draw whatever indicator, maybe EMAs or whatever. It shouldn't take you very long to be able to create what it is you want to see. It is the entry where you're going to be tested. And here's the thing: you know how you're tested? Not just on your ability to wait for exactly what you want to see, which requires discipline and patience, by the way, but your ability to wait for that to happen. And I'll tell you, that is the single greatest killer of a trader. Waiting. I've said this in multiple classes before. You, as a trader, you are paid to wait. This is why we say that patience is the best aspect or the best thing that you can need or have as a trader. Patience, pay tense. You're paid in the tense form. You understand? Master Wongi asks, do you use moving averages or are you solely price action based now? No, I use moving averages still, right? You can do exactly what I just did with moving averages still. The reason I took them off is to prove to you that they are just one part of the entry process, but you can do it absolutely without them. You understand? It's not necessary. And I know it sounds weird coming from me, where a lot of you know that I perpetuate that EMAs are the only indicator that you need. In actuality, that's only if it is you are finding the opportunity. It's as Eben said, it's a confluence, and you're absolutely right. It's only a confluence. What is a confluence? It is another confirmation, something that doesn't require you to be, you don't have to be a part of it. The EMAs basically do their own thing. You understand? Oryx asks, do you think about imbalances? I don't know what they are. I don't know what an imbalance is. I've never learned that. And I have been doing fine just up until now, right? I don't think that it's not necessary to know it, but if you want to learn it, add a confluence to your analysis, then fine. But I don't use them because I don't know what they are. You understand? I genuinely don't know what imbalances are, and that's fine. You understand? So that's that. Let me see. Right. So I was gonna do a live analysis, right? So I was looking at, look at here again, CADJPY. So can we say, do we agree at this point that it's definitely bullish, right? We know that above this area, there will be liquidity. Makes sense. So what I'm thinking is that the dealer is probably gonna try. It makes sense for me. This is just my analysis. The dealer is probably gonna try to come up to this general area here, right? It makes sense. What I have found is in my practice and my testing and my trading for how many years now, I have found that oftentimes resistance don't hold, at least not for long, right? We know that traders are going to be treating this like resistance. We know that there are going to be traders above this area with buy stops. Remember the gas station, in order to go up here, it makes sense, at least in my opinion, it makes sense to go down here, capture the liquidity, right? Capture the stop losses of the buyers who are actually right about the direction, because it is a bull market, at least for now. It makes sense to go capture the liquidity of the buyers, stop out the buyers because we know their stop losses will be somewhere below here, capture that liquidity and then buy. That's what I'm thinking. That's what makes sense to me. You understand? It is the exact thing with M's and W's, but it's just the exact opposite by virtue of you're not looking for a reversal, you're looking for continuation. So you get the rejection and then momentum in your favor. You have that momentum in your favor. It's just like with religion. I'm a Catholic, I say, and they say it all the time, if God be before you, who dare be against you? If the momentum is in your favor and you are following the momentum, not the trend, it's not the trend is your friend, it is the momentum. If you're following the momentum, you're going to quickly realize that you're going to win more trades because you're not trying to go against anything. You understand? That's just me. That's just me. That to me, that is what makes sense. You understand? They are good, but people concentrate on them too much. Right. Imbalances are gaps in the market. Okay, good. But I learned that, right? Fair value gaps. I've never learned about those things or the blocks, fair value gaps, bodies of imbalance. Right. Imbalance is nothing like divergence. Right. So I see you all talking about imbalance. I genuinely don't understand imbalances. Maybe I should try to learn them. And I have no problem with that. Maybe I should try to learn about imbalances to add another confluence to my ability to trade. Right. And I have no problem with that. Maybe I will try to learn about them. If I do, I'll probably come back and tell you guys about what I've understood about them. And I might take you guys up on that. Right. Um Somebody asks, do I swing or scalp? Right. I am what you would consider to be a hybrid trader, meaning I'm an opportunist. So if I am able to capture 10 pips, 20 pips, if that's where I'm taking out, I'm fine. But if I could turn that 10, 20 pips, right, into 50, 60, 100, 200, 300, I will. You understand? You'll never really grow if you don't allow the trade to stay open. Somebody, I can't remember who just said it, but they said time in the market beats timing the market. Meaning the longer you stay in one trade, the better it is for you. You understand? Because obviously you're exposing yourself to much less risk. You understand? So for me, if I can hold, and I've said this to many people on multiple occasions, if I can take one trade and hold it forever, I probably will. I mean that. If I can take one trade and just hold it for the rest of the time, I probably will. You understand? But obviously we know that we can't do that. So at some point you will be taken out. Right? I see a good bit of questions happening here. Let's answer them quickly before we do another analysis. All right. Actually agree with your analysis. What would be your bullish target? I can't see it getting past 94800. 94800. What are you talking about on 80 JPY? Oh, right. Let me see. 94800. You can't see getting past there. Let me see. So in a case like this, right? This is where I might go up to the higher time frame to see if there's anything above there. 94800 would be somewhere here. You can't see getting past there. Okay, cool. So let's look on the higher time frame. And what would I be looking for on the higher time frame? It's very simple. Momentum. Momentum. So I'll go on the daily. This is definitely a bull market. From since the 20th of May, 80 JPY has been a bull market. If we look all the way up here, you're saying that you can't see getting past 94800, which is somewhere here. But there's this up at the high, which means liquidity is trapped up here. So I think it can get past 94800. When? I don't know. Where? I don't know. How? I don't know. But that's what reaction and actually waiting upon the analysis to present itself and execute upon that information. That's what is very important about that. So I think it can, right? But I could be wrong. And that is beautiful. That is beautiful, right? Go take in ICT YouTube course. Okay, cool. Maybe I will, right? Do you use fibs? No, I do not. Swinging CADJPY buys. Interesting. So I agree. I definitely agree on the buys for CADJPY. Because again, if we look on the daily time frame, you can definitely agree with me. This is a bull market, right? And maybe it did reverse off of this high. But the interesting thing is it's back bullish again with clear rejection to the downside and clear momentum back to the bull side. So I would be probably looking for more buys as well. So I agree with you. I am in 100% agreement. But I don't have an opportunity to buy just yet, so I wouldn't buy it. But I agree with the buyers, right? Do you think there's certain candles to look for before direction occurs? If yes, will you explain? So I don't think, I'm not talking about certain candles for direction, but what I will say, certain candles for an entry. Yes, right? And the candle that you want is not a particular candle, so I can't show you a particular candle. But what I want to see is exactly what I've been explaining since the duration of this class has been going on, which is if I'm looking for buys, I want to see for sure that the momentum, you can actually see, try to visualize the momentum in the candle. So you're looking for buys, you know you're looking for the market to go up, right? Try to visualize what that would look like in a candle that could give you a good entry. So it will be not a black candle. In my case, black is bullish. It's not a bull candle. It's a bear candle. But the bear candle actually has bullish price action. It has bullish tendencies. So it really looks maybe like this. That is a good sign, but it's red, right? So it really looks like this, right? That is a very good sign. It's a very strong sign that there is possibility for buys, right? Very, very strong sign, right? And I believe one of my students sent me something today. I think it was on, it was a GU buy. Just now, let me tell you. I believe it was on, one of my students sent me a breakdown today, right? No, it's not GU. Was it GU buy? I can't remember. I can't remember. But basically, the whole idea behind an entry is the entry must obviously align with the directional bias. Meaning, you want your entry. Well, what currency pair was I on? All right, there we go. Right, the entry must align with the directional bias. So if you know you're looking for buys, you don't want to see a candle that's bearish. You want to see a candle that's bullish by virtue of the nature of the candle. Yes, you want to buy on a sell candle, but that sell candle must be inherently bullish. Does that make sense? Am I making sense? I know it might sound confusing, which is again a cognitive bias by itself. But the bearish candle must be inherently bullish. That's what I would look for. Right? Fibs should be used 50%. Okay, I still don't use fibs. Swing isn't guaranteed. I agree. Hold your USD buys. Let's see. So let's take a look at EU. So definitely right now EU is in a bullish range. So what I would look for on EU, right? Automatically I'm going to draw this high here because we know that at this high there are traders who are most likely prioritizing sells every time price gets into this high. We also know that right above this area and maybe even right above this area as well, right? If maybe even up here, there are sellers probably trying to buy us with sell limits, and there are buy stops above these areas. So we know that there's liquidity above this area. I'll go on the higher time frame now to see, and EU is actually a bearish market. So what I am actually thinking could happen is the dealer. So I would actually now, I'm thinking that it's probably going to try to continue to sell. So I would look at the lowest low, right, which is this. I would say that it's probably going to try to break this area, right? Probably going to try to break this area because we know that there are buyers down here. So I think that it could possibly try to go for the liquidity above this area, do something like this, and then that. That's what I'm thinking, right? That's what I'm thinking. And only when it starts, so basically when it's at this point, in this duration here, not here, in this area is where I would look for sells. I am thinking your USD is going to continue to be bearish, but maybe you're right and maybe I'm wrong, right? Maybe you are right, maybe I'm wrong, right? No, I'm not an AUD right? Can you please analyze gold? I'll check that just now. Do you know Forex? You sound like him. I used to teach for Forex years ago. All right. They only took the sell side. All right. Cool. I can see Wyckoff schematic of the redistribution forming. Okay, so I don't know Wyckoff. I don't know the Wyckoff system. I know of it, but I don't know what it is and the particulars. Breakup structure, the market might go up to close. But okay, so I don't know. I genuinely don't know what that means. And maybe you're right. You realize that that's what I'm doing, right? I am genuinely telling you that I could be wrong. I could be wrong about everything that I'm saying, right? But it is what it is. So that's what I'm seeing for EU. CHF JPY, similar situation here. It's definitely bullish at this point. Let me see overall what is it doing. It's definitely an overall bullish market. You have the clear bull momentum here since from God alone knows how long, right? That's clear. There's definitely liquidity above this area, meaning I think that it could possibly try at some point to get back to this area. It's definitely rejecting the downside. It's definitely back bullish momentum. I think that, and there you have it here again. You have liquidity above this area. You even have a little bit of liquidity above this area. What I would do, I would look to see maybe where there might be some liquidity. Why do I think this area might be liquidity? Because this is a last area where traders might have been maybe trying to place buys. You have that, you have this here. There might be even traders who are trying to sell here and they're still in sells. You understand? And they just have it holding it open. So I think maybe I move like this and then that can kind of occur. And again, I could be wrong. I could be absolutely wrong. And this can occur in any session. Any session. Right? Any session. Have I used volume? No, I don't. Right? I don't. You don't use EMAs anymore? Yes, I do. I'm just using this to showcase market structure, what I believe market structure is. AUD USD sells. Let's take a look at that. Let me see. Where's AUD USD? So AUD USD. All right. So it's definitely gone back bearish, but it's not clear to be bearish just yet. There's no real clear momentum. Yes, it's bearish, but I mean, you could definitely see that it hasn't really decided. I would consider that somewhat ranging. All right, maybe it's in a bearish range. But if I look on the daily for the direction, the overall direction, AUD USD has definitely been bearish. It's a bear market. But at this point, it's not clear to be bearish again as of yet. There's still clear rejection to the downside. So I would be careful. I'm not saying you're wrong, but I would be careful for sells at this point. You could be right, but I would be careful, right? I'm not seeing any real uh, uh, confirmation of sells at this point. That's just me though, right? Um, G. Diaz asks, do you look at news or fundamentals? Maybe just to understand where the market might get more volatile, but to say that I'm using the actual fundamentals to help formulate an analysis, no, I don't. I believe in order to do fundamental analysis correct, you can't just look at the fundamentals of that, the news that affects this particular currency. I want you to think about this, right? If let's just say there's an AUD news event happening tonight, I'm not sure if there is or isn't, right? But let's just say there's an AUD news event happening in the next hour or so, right? And you want to look at the fundamentals about AUD, you want to look at the economics of the Australian dollar. You cannot look at the economics of only the Australian dollar, for the reason being that it is not just the dollar that is going to, the Australian dollar is going to be affected. The yen is going to be affected in relation to the dollar, the Australian dollar. The Swiss franc is going to be affected in relation to the Australian dollar. The US dollar is going to be affected in relation to the Australian dollar. And all of the other currencies are going to be affected, which means to do proper fundamental analysis, you cannot look at just the economics of or the fundamentals of just the currency pair that's going to be affected. You have to look at the economics of the world. You have to know what the world is, what is happening in the world. You understand? That's just the way I look at it. And again, I could be wrong about that. But for me, I don't think it's feasible for me to sit down and look at the economics of everything that happened in the world. So for me, I just not include fundamentals in my analysis at all. All right? That's just the way I do it. Right? I saw somebody asks, can I analyze gold? Right. So let's do that very quickly. On gold, I believe based on the fact that it has now gotten back to this area and dropped back down, it grabbed the liquidity and is definitely playing around in this area. I don't think it is a reversal, for the reason being that if it were a reversal, meaning as in if it were going to go down, it would have done so already. By staying in this area, by staying at this high, I think if anybody is to sell here, they would get a really good opportunity to sell, which means there's not a lot of room for the dealer or the market maker or whoever, whatever entity, right? The algorithms or whatever. There's not a lot of room for them to make money. If they want to make money, their goal is obviously to capture people and catch them off guard, catch them with their pants around their ankles. So why would they stay at an area where it is a really good sell? That don't make sense to me. So I don't think it is a sell. I think it is going to continue to buy, especially considering the fact that it is overall bullish at this point. But I don't have a reason to place a buy on gold. So I just have a bias at this point. That's what I think about gold. All right, news tomorrow could push it down. Maybe you're right. Right? Maybe it's gonna probably try to target this area again to capture some liquidity. So this is what I'm saying. I have an analysis saying that gold is going to continue to buy. I can be completely wrong about that, but I don't have an entry. So no trade, no setup, no trade. Simple. All right? Any questions? Anybody want me to take a look at anything before we close off? We are nearing the 1 hour mark, and I don't really go too much longer than an hour. I don't want to keep you off for too long. What do you all think? Do you agree with my thought process? Do you agree with the way that I'm thinking? I'm thinking from a place of I just trying to understand what it is I see in. And that's all you really need as a trader, you know. Because the beautiful thing is, right? Anybody who is cocky enough to say that they know exactly why and thing and they know exactly why they're gonna lose and they know exactly why this happened and why this happened and why this happened. What is interesting about that is, if you really think about it, because we know that nobody knows what is going to happen, that cockiness is actually going to disrupt you from ever recovering from a cognitive bias. And the beautiful thing is, nobody knows what is going to happen. So you might have an analysis that is converse to mine, it is the exact opposite of what I have. And you might be right and I might be wrong. But nobody's there to confirm that, is there? What is important is you understand what you're looking for, and I understand what I'm looking for. And you could be right this time, and I could be wrong this time, and maybe it'll be switched, and maybe it'll be the tables would turn the next time. Now, if you find like you're losing more times than you're winning, it is clear that the system does not have an edge, and then you need to do something about that, right? That's clear, that's obvious, right? But once you understand what you're looking for, that is it, That's what being a trader is. Paying attention to the details and being able to use those details in a manner that you can actually execute upon and try to make money from it. That's it. You're paid to analyze data. That's it. He, Bop, interesting name, right? Asks, could you elaborate why algos and market makers can't make money here? Good question. Good. So we know that let me not say that they can't make money, but the goal of the dealers and the algorithms or whatever is to capture the liquidity. Remember, liquidity is what will allow the market to move. Picture the gas tank again, right? Picture you putting gas in your tank, you driving for however long, you finish all the gas, and then obviously you have to go fill back up the tank. The liquidity needs to be captured at some point in time to fill the tank again so you can keep going. Remember, in order for the dealer to move the market, he needs liquidity. Now, if he's staying in an area where it is proposed to have liquidity, it is assumed that he's capturing liquidity. Now, if he is in an area where there are this is a confirmed potential resistance, right? I'm going to say confirmed. This is a proposed resistance because we know that's what people probably will be thinking here, right? It's a resistance. Why capture liquidity in this area here and then actually give them the sell? You understand what I'm saying? It's just about, I don't want to say it's counterintuitive, but try to put yourself in you know what's a beautiful example? A beautiful example is a mousetrap. Right? You know, when you set a mousetrap, maybe you have a rodent problem at your house. Do you put down a mousetrap without any bait? Think about it. Do you put down a mousetrap without any bait? No. The purpose of the trap is to have bait to entice people, right? To come, or to entice the mouse to come, be trapped, and then you can manipulate the mouse as please, right? As you intend to. The purpose of staying in this area, in my opinion, is indeed a trap. Because by staying in this area for so long, it is enticing people, it is inducing people, seducing people into thinking that it is indeed a trap. All right. It is indeed, not thinking, sorry, that is a trap. It is indeed a resistance, and it is indeed going to sell from this area. And in actuality, it's probably not. It's actually a trap where the bait is concerned. Does that thinking make sense? The beautiful thing is maybe it's not a trap, but you don't execute upon that information unless you have your confirmation sphere entry, which is obviously rejection in the opposing direction of your directional bias, which is in this case for me buys, right? And then obviously momentum in the buy direction. So what I think could possibly happen is if we're looking at this new area here, maybe gold could do something like this, where it can drop down. Maybe it might, where it can drop down, capture that liquidity, and then go back up. And then, well, we have this area here to pay attention to. That's just the way I am looking at it. And it might. You understand? So that's just the way I look at it, right? Slasher asks, as a pro trader, would you be able to tell us your average month profit? I wouldn't tell you the profit because I don't believe any trader should tell you the exact amount of money that they make if they are telling you there's an agenda behind it. But I will tell you that my risk reward ratios, and I will tell you my win to loss ratios, and I'll be honest, my win to loss ratios have been pretty sucky this year. I have a very big event happening to me this year, and it most likely is affecting me mentally. And obviously, we know that psychology and mental is a very big and important part of this game. I have had pretty sucky win-loss ratios for the majority of this year. My lowest win-loss ratio per week on a weekly basis has been as low as 19 or I think 18%, right? Meaning let's just say out of 10 trades, I'm winning literally 2. I'm losing the rest, right? But my risk reward ratio on average is 1 to 5, 1 to 10, between 1 to 5 and 1 to 10. So I can tell you that, right? And that's what I'll give out. I don't believe that you need to know exactly how much money I make, because there are a few things in this world that you don't actually talk about, and money is one of them, right? I don't believe in telling you exactly how much money I make. That's just me. Right. So he Bob asks, I understand, but couldn't the market makers also trap buyers, trap breakout of resistance and sell? Yes, but in order to do that, right? In order to do that, I mean, again, doesn't it make sense that it come to this area now before it actually sells? So in other words, instead of this happening, we might have maybe something like this, right? Which is an M pattern in this case. And if it is an M pattern in this case, well, once it does that, then we know that definitely if it's rejecting this top side here, because it has to reverse off of this area, if it is rejecting this top side, well, then we know that trying to buy is a dangerous thing, because it is setting up for a reversal. So you're right. But this is just about deductive reasoning. Remember, we're not trying to confirm, we're trying to basically what's the word I'm looking for, boy? Oh gosh, sorry. For want of a better word, de-theorize, or trying to break down why it mightn't work then. You understand? Why it mightn't do this, why this mightn't happen. No cognitive biases here. Allow yourself to be okay with whatever happens. If you're wrong about the analysis, it's fine. Yeah? Euro JPY, let me take a look at that quickly. Euro JPY. Okay, same thing here. So let's look at the directional bias. Euro JPY is a bull market. So we know that it's bullish all the way from since 2016. It's definitely bullish. Clear bullish momentum, clear bearish rejection. Like you have beautiful bearish rejection here. If we come back down the 1 minute, you can see the bullish momentum here. There is a definite area of liquidity up here, right? There are 3 taps to this area, so I don't believe it's a reversal. I do believe that maybe something like this can occur, right? Where it goes to the liquidity down here, because we know that this is an area of interest where traders, you can even drag it all the way over here, right? So I believe something like that can happen. If you can get the rejection to this area and then momentum in this favor, I believe Euro JPY could buy, right? I think so. Can you give thoughts on wick fills, Matt? So let me put this question up. This is a theory created by Raja Banks, and or better known as Wicks Don't Lie. Big up yourself, bro. Wicks Don't Lie has theorized and has seen it work multiple times. It says that when prices in momentum, the wicks will be filled. Why do you think that is the case? I don't think he has ever covered this, but why do you think the wicks will be filled? So let's go to the daily time frame on EJ. So we know that price at this point in time is in bullish momentum. And if you pay attention, there is a wick on the previous candle, the previous daily candle, which was yesterday, right? Yesterday's trading day, right? The wick will be filled, in my opinion, for the simple reason that there is liquidity up at the previous high. It makes sense. It makes sense that there's liquidity up at the previous high, so the wick will be filled by virtue of you're going to see price go back to this previous high, fill the duration of this, or fill the distance of this wick, because this is the wick here. Let's be real. This is, if I draw it, let me even put a little zoom. The wick actually starts right here. All right. So let me go to the daily time frame. You can actually see when the wick starts. Right? Look where the wick starts. Right? So it makes sense that it is going to fill the duration, or the distance, I should say, sorry, of this area to capture that liquidity. And as you can see, Euro JPY is in bullish momentum. Does that make sense? That's what I think about it. That's how it makes sense to me, at least. Right? Thank you for the explanation. I have no biases, so definitely need more confirmation. Don't trade gold, but wanted to hear the explanation. Good. So and that's good. The fact that you don't trade gold and you're not trying to trade it because I say it's gonna do this, very good. That is a disciplined trader. That's what you want to do. So keep that up. Right? I see divergence. I see gold setting up to go bearish. Maybe you're right. Maybe you are right. Right? And Matt says it makes sense to him the way I explain it. Good. I appreciate that. You are happy about that explanation. Any questions before we close off? Does anybody want me to take a look at anything else before we close off? As of right now, I'm not seeing any opportunities for this Asian session. So I'm not going to enter anything right now. But I digress. Do we have any questions before we close off? Anybody doesn't understand what I said? Anybody doesn't understand what I've broken down? Anybody feels like you want me to break down anything? Let's take a look at UJ. UJ, let me see. So UJ, same thing here again. Same thing here again. Now let's look at UJ overall. UJ overall is a bull market. That's clear as day, right? Definite bear rejection, bull momentum coming in. You have your high created, meaning there is liquidity above this area. Let's see if there's a daily candle with a wick. Yes, there is, but it's, I would say that the momentum has definitely have started to decrease by virtue of, you see this. This is a range, and you can see this as a range. If you go on the 15-minute time frame, it's clear to be a ranging market. So I wouldn't say that this is clear momentum coming up because it's clearly a range. So I would be careful to trade UJ now, but I am anticipating it to break this area completely and continue back up on the bull move all the way back up to this area, right? All the way back up to here. So in actuality, what I'm doing, all I'm doing is momentum-based trading. That's it. I'm just going with what the momentum is. I'm not trying to go against the momentum and trying to find the market at the highest potential high and sell it all the way down. I am not interested in that. It doesn't make sense to me. It's much more risky. I am fine. Right? See, I did gold already. See, did JPY, I did that already. You can look at the recording after NZD JPY quick analysis. That is from AC McSpacey. That's an interesting name. NZD JPY most likely has the same thing because all of the JPY pairs are correlated. I don't have this drawn out as of yet. Is it a bull market? It is a bull market. It does have potential for buys. Same thing, but again, we have to wait for the momentum to come in and clearly show us opportunity. BTC, all right? BTC. Do I trade USDT? I do trade USDT. I don't trade NAS 100. BTC. All right. So nobody asks about that. That's interesting. As the first person asks about BTC. So again, I spoke about BTC in a recent analysis on my YouTube, right? Again, if you're not following my YouTube or subscribed to it, you can go there, subscribe to my YouTube, right? I try to be as transparent as I can be. On Bitcoin, this is a bear market currently, right? So let's go to the daily. This is definitely a bear's market, right? At least from November 2021, right? And well, for the majority of this year, all of this year actually has been a bear market. Now, I am thinking that, let me go to the 1 hour. I am thinking that this low, we know that there's liquidity down here. We know that. We know that there's potential buyers in this area here. We know that there are sell stops in this area here. So that's definite liquidity, right? We know that there are stop losses or buyers in this area. I am thinking, let me see, let me go on the 1 hour. So you see now where I am, why I'm coming to the 4 hour, right? Because I want to see the bigger picture. So you see this here? See this? This is an area of interest to me because I know that there would be liquidity in this area as well, right? So what I'm thinking is it might try to do something like this and then drop all the way back down. Maybe. So we're going to leave that there. We're going to monitor it. I don't know. I don't know if it's going to do that right from this point. Maybe it's going to consolidate a little more, then go up, then maybe it's going to go down, then up. But I am thinking before it drops, at least before it breaks this area, it has to go for liquidity. This accumulation here is liquidity enough to drop, but I think it makes sense to get rid of more sellers before it actually sells. How do you get rid of more sellers? By buying. That is just me. Right? Right? GJ will be the exact same thing as all of the other JPY pairs because, like I would have mentioned, all of them are positively correlated at this point. Does not mean that you should be buying all of them. Doesn't mean that you should be looking for an entry on all of them. It doesn't mean that you should even try to trade all of them right now. Wait for your confirmations. Please stop trying to listen to people who say that they know exactly what the market doing. They don't. They don't. If you realize everything that I've said tonight, I have also added with it that I could be absolutely wrong in my thinking. And I am okay with that. I'm okay with that. I'm not in anything, therefore I can't lose any trades. A missed trade is better than a lost trade. I rather miss the trades on all the setups tonight than try to enter something before it's time and lose. I'm gonna feel way more sucky, way more upset, way more depressed if I enter trade before I should enter, lose when I know I wasn't supposed to enter. Now, if I do everything I'm supposed to do, follow my rules, follow my criteria, listen to to what I want the market to tell me, enter, do everything that I'm supposed to do and lose, I know that I did everything in my power, everything that makes sense by virtue of my analysis, and there was nothing I could do. You understand? I was in control of everything that I was supposed to control, and there was nothing I could do. There was basically no choice for me to lose that trade. And that is going to happen sometimes. That's fine. Yeah. GU, I think this will be the last one that I do. I think I spoke about GU already. Did I? Yes, I did. Did I? No, I didn't. So GU is definitely a bear market, but it's a ranging bear market back on this low. So I'm going to use this now. This is interesting. So GU, interestingly enough, is right around this liquidity area here where we know that traders might be prioritizing buys, right? It's just broken this area and then going up, broken up, and then back on a bear trend or a bear momentum move again. It's also at this point in time decreasing momentum. How do you know decreasing momentum? When obviously on higher time frames, they're not showing any real moves, because obviously on the higher time frame, we will see these as candles, meaning momentum, right? This tells me momentum is decreasing and it's a range. And if you go down on the 15-minute time frame, you will see exactly that. It's a range. Because it is in a range, I will be very careful to trade it at this point in time. So it makes sense for me to stay away from GU, at least for now. Right? Do you use the ECR? Yes, I still do use the ECR. I still teach it. It is still very potent. It is still very much powerful enough to be able to use with in tandem with this system that I'm teaching you here. What I am trying to teach you here is market structure. Market structure is a combination of elements coming together to create the market. Right? Market structure is not just drawing a trend line and saying, yeah, it hitting this trend line here, so sell it. Market structure is understanding all of the elements that are on the chart and trying to make sense out of them, building a picture of the structure. Remember, a structure is a combination of elements that come together to create one thing. So market structure is all of the elements that we're trying to pay attention to. So if you realize I'm not drawing one trend and I'm saying it hit this trend, so sell it. No. What I'm showing you here is pure market structure, which is I'm trying to pay attention to all of the different elements and confirmations that I can use to build and create an analysis bias and potentially eventually, that rhyme, potentially eventually an entry, right? So that's that. Nicholas, long and shorts, interesting name. I lost all feelings in trading, winning or losing, and there's no reaction no more. Don't even know that if that's a good thing. To be honest, bro, it's actually a very good thing because it means that you've now become very cool-blooded. Cool-blooded thing, despite what some people might say, is a good thing because it means that you're neutral. It means that you know the market doesn't have a lot of power over you anymore, because you'll quickly realize if you are reactive from a mindset perspective. If you are reactive in the market, so I could actually stop the screen share now, right? If you are reactive in the market by virtue of how the market really, for want of a better word, makes you believe and makes you feel, makes you get into emotions and your feelings, right? If you are reactive, whether you be positively reactive or negatively reactive, you might think that being in a good mood might make you have a better understanding of the market. You might execute better. It's actually the exact opposite. If you are having a bad day, you're going to have a bad trading day as well, because you're not going to be seeing clearly. If you're having a good day, the same exact thing is going to happen. Conversely to what you think, for the reason being that you're having a good day. So you're thinking now, cognitive bias, confirmation bias, you're thinking that you're having a good day, so everything should follow suit. It kind of come like thinking that good-looking people automatically make more money, they're automatically smarter, they automatically have better genes, and, you know, that's a cognitive bias, right? So not because you're having a good day means you're going to have a good trading day. So the fact that you are unreactive is actually a very positive thing, because the market doesn't have a lot of power over you. So I hope that, you know, you understand where I'm coming from with that. My friends, I really hope that you enjoyed this session. It was actually a lot of fun to break down cognitive biases tonight. And yeah, if you have any questions, again, obviously you can always reach out to me, Kata Trading. Subscribe to the Trading Nut YouTube channel, turn on post notifications. You all know the story, ring the bell, blah 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 blah. If you're not following my Instagram or my TikTok or my YouTube or whatever, it is at Ikata Trading on everything. If you want to message me or ask me any questions, same thing at Ikata Trading. Guys, have a great rest of your day, great rest of your night, great rest of your week. Practice proper stop loss placement, proper risk management. Very, very important that you do so. Don't listen to people who saying stop losses make you lose trades. Stop losses are extremely important. Guys, have a great rest of your week.